Yo, what is going on? In this video, we're going to be talking about like how to handle and trade and understand gaps and also reversals, right? Trading gaps and reversals. So a stock can gap up and it could gap down, right? And then reversal is like a stock is going down and then knowing when it's going up, and then when the stock is going up and knowing when it's going down, right? And I'm talking about this in the perspective of day trading, right? Now, also, I like to make things very simple. I try not to overcomplicate trading. I've been at it for a year, every single day for the past year. And so this is how I perceive it, right? So I want to break that down. So the first one we're going to go over is gaps, okay? A gap up and a gap down. I'm going to go into the charts and then we're going to go over reversals, okay? So I'm going to pull up the charts and then we're going to get into it, right? All right. So these are gaps. I mean, this is the charts right here, right? This is Meta. Right now, the market is open as I'm recording this video, but let's go to the daily time frame. All right. So daily time frame, basically, when every candle represents a daily time frame, right? So one day, each candle equals one day. So when you're looking at stocks, right? And you see that a stock, let's say yesterday, so right now is Friday. So let's say on Thursday the stock closed at $400, and then on Friday the stock opened at $410. That means that the stock gapped up, right? So follow me. What if the stock closes on Thursday at $400 and then on Friday the stock opens at $390? That means that the stock has gapped down. All right. Now, this is what tricks people and traps people. That's why I got this right here called a bull trap, right? So here's what happens. So in this instance right here, the stock gapped up from here and then it gapped up again, right? So this was on the 2nd of January, right? Meta ended at 5.99 on Tuesday. On Monday, Meta opened at 6.04, right? So that's a $5, well, $4. Well, no, that's like that's a $6 gap up, and then the next day, it closed at 6.04. Really not a lot of action this day. Well, some action, but it was an indecisive day. The next day, it opens at 6.11, right? So it gapped up again. So when the stock gaps up, the stock market is always trying to balance itself out. So when the stock gaps up, it may not be the same day or the next day, but when there's a gap between stock prices, that means that at some point in time, the stock has to fill this gap, right? And it has to fill this gap. So this is how we get reversals, and sometimes we get tricked out in the market because we don't know that there's a gap and the stock has to fill that gap, right? So Meta right now is not filling the gap. But what Meta did was today, this is a wick, right? Today, so far, Meta has filled the gap from the other day because the price came down here and then it bounced off. So actually, it did fill the gap. It filled these two gaps and then it went up, right? So let's go. Watch this. So we got, this is on, like I say, this is on Thursday, the 2nd of January, right? So the stock closed at 5.98, right? Now, if we go to today on a 15-minute, Meta touched 5.97. So what that means is Meta came down to fill the gap and then it blasted off. This is why it blasted off, because there was a gap and then it filled the gap, right? When I learned this, it blew my mind, right? This is on the 5-minute. So 5.97 and then it went up. This happens every single day in the stock market, depending on the stocks, right? Let's look at NVIDIA. Let's go to the daily time frame. All right. So NVIDIA is still down, but so yesterday, or on Wednesday, NVIDIA opened at, well, let's look at this one right here. On the Friday, January 3rd, NVIDIA closed at 144. On Monday, NVIDIA opened at 148. So it gapped up $4, right? And then this is why I have this purple thing, this rectangle, because that was a gap. I was charting them out. So then on Tuesday, NVIDIA went here. It opened here at 153, and then it dropped. But look, it had to fill this gap. And that's why it dropped. But now look at today. NVIDIA is still going down. Why is it going down? Because it had to fill this gap as well, right? Now, if you look at the day, so let's see where this is at, 138. So it filled that gap over the past couple. It filled these two big gaps, right? And so, and look at this one right here. NVIDIA gap down, right? So it closed at 142 here, right here, right? And then this day, it closed at 138. It ended up filling the gap right here, right? So this green day that we had on Friday, January 3rd, is filling the gap from something that happened like a month ago, right? And then when you go to this on the 15-minute time frame, you see what happened. So it came down, filled that gap, and then it's on its way up, right? It's above the EMAs right here. So NVIDIA today or Monday is probably going to try to touch 139, right? Because there's no EMAs, but this is on the 15-minute, right? So that is gaps, gapping up and gapping down, right? So this is why charting is so important. You don't want to get faked out. You don't want to get faked out thinking that a stock is going up, but it's really going down because it has to fill a gap. And then it ends up going up, right? How many, like I've been in trades in the beginning. I got into a trade. I thought it was going up. It went down. I'm down $300 because I was wrong and I didn't know how to say I was wrong. And then it ends up going way past where I got in at, and I could have made money if I was patient. But it was all because I did not understand. That's it. I did not understand what was going on. I did not understand they had to fill a gap, right? From a week ago or a month ago, right? So the stock market is always trying to balance itself out. Always remember that, all right? So the next thing we're going to go into is now reversals, and that is on a daily time frame, right? So that's day trading. This is all day trading. So now let's go into the charts and let's look at reversals. So we got, let's go back to Meta. And this happens every single day, right? Every single day. So we on the 5-minute time frame just so you can see the candles. So look, Meta came down right here. Boom. So we got a red candle, it stops, right? This next candle it wicks off of this level right here, right? Now, we already said that earlier that Meta had filled the gap. So that's why, but it stopped right here. So you have one candle and then another candle, and it stopped basically at the same place. So it established some level of support. It didn't just free fall right here, right? It established some level of support. That wick, you would probably enter right here if you feeling real confident. Or you could wait for this next candle and then boom, it took off. So it went from 598 all the way to, what's this at? 620, right? And this is in a matter of 5, 10, 15, 20, 25, 30 minutes, right? 30 minutes to hit 620. So if you got in this trade, you would have ate real good, right? But look at it, it did it again. But this time is a little bit clearer because it went up, pulled back, went up again. So this is a double bottom right here. You see this one and you see this one? These are two, you see that W right there? That's a double bottom, that's a pattern. So when you see a double bottom, then you know on that second touch it's going to shoot up, and that's exactly what it did. But when you look right here, we got two This is support right here, right? This is support right here. Now, here's what happens. It came and hit support, bounced off, came and hit support again and bounced off again. So it held the support line that it established earlier. So when that happens, you already know what time it is. It's gearing up to go up, right? So that's a reversal to the upside. Now we could look at any stock. Let's go look at Tesla. Tesla did it. You see another double bottom? Well, it's like an ugly one, but it's a W. Boom, 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 and then boom, right? This is a little bit choppiness, but boom, right? But so look, so this is what it does. It set a bull trap, right? It rejected off of this, came down, had a sharp move down, right? And then for 15 minutes, 5, 10, well, I'll say 5, 10. Yeah, for 10 minutes, it hovered around this little level right here, right? This little range, let's say 385 to 384, right? And then it shot up. And then it came back down, but it didn't go as low as it just did. And then it chopped around and then boom, right? So if I was trading this, I would have got in right here and I probably would have rode it up from 386 to maybe like 390, right? I personally don't like holding through these EMAs because a lot of times it could hit this and then come back down. So I usually get out on a reversal to the upside. I usually get out. I get in at the bottom once I see it's established a support, and then I get in and I get out around these levels right here. If I'm feeling super confident or just like more patient, I may wait. Or if I see that it's not rejecting super hard off, I'll stay in the trade and wait. But usually I get in at the bottom and get up right here, right? But this has happened. This has been all day. Today specifically, I'm seeing a whole bunch of double bottoms. 1, 2, boom, to the upside, right? I'm seeing a whole bunch of double bottoms. But so that those are reversals, and you can look at it to the upside or to the downside. It really don't matter. That's Palantir. Yeah, you can look at it to the upside or to the downside. Let's look at to the downside. Here's another reversal, right? Tesla yesterday, same exact thing. It chopped around, came down. This was support from pre-market lows. Didn't hit it, reversed, went up. It really is that simple when you really understand the game, right? This was a boom, this reversal, right? And this right here, this candle right here represents a reversal, right? An inverted hammer. So that's how you want to play reversals. When you see a wick on and it hits like it doesn't hit a level that it's supposed to, then it's probably getting rejected off that level and it's going to go back to the downside, right? That's how you want to play that. So yeah, we got gaps, gapping up and gapping down, and then reversals to the upside and to the downside. It's really, really, really that simple. When I was in the beginning phases of learning trading, all these small little questions, they weren't really getting answered. And so, I lost some money, but I started to really figure it out and understand. I did a lot of research, watched a lot of YouTube videos, et cetera, et cetera. You know what I'm saying? So that's how you handle gap fills and understanding gaps. And then also that's how you do reversals. All right. So I hope this video helps you on your journey. And be sure to stay out of your head, get out of your head and get into the world, because your head is a dangerous place to live. I'm going to see y'all in the next video. Peace.